Good evening, everybody. Welcome to Verified Investing Live. My name is Gareth Soloway, Chief Market Strategist and Pro Trader here at InTheMoneyStocks.com. Good to see everyone. Glad to be back here, rocking and rolling here on this beautiful Sunday evening. And again, I hope you guys are excited to get back to work. The market has been good to us. The technicals have been working like a charm, as they should. And it's time for us to go back to making money. Right now, S&P futures have just opened with a slight gain, looking like the S&P futures are up about 2 points. Dow futures up about 45. So again, very early on, doesn't really tell us a whole lot. But right now, we're seeing a flattish type market. Bitcoin had a nice surge over the last, couple days. We're currently seeing it trading around 41,700. I do think it has upside to about 44 to 46,000 before running into major resistance. The Qs. We have the Qs chart up here, and as you guys can see, we've had some wild price action on the NASDAQ 100. A big bounce up, then a big pullback for one day on Thursday, then a bounce back on Friday. Notice how, again, the bounce back on Friday certainly was not big, as it really just negated less than half of the move down from Thursday. So again, can we go up? Can we fill that gap? If we fill that gap, can we go up to the scene of the crime, which is this upsloping channel of the trend line, right? That's going to be big resistance. If we flip over to the SPY, take a look here, you can see, again, same kind of general thing. The only difference is you had a little bit of a bigger bounce or less downside on Thursday and a little bit of a bigger bounce on Friday, but still not back to the negation of that down move from Thursday. Same thing, does it go back up and trace back to the scene of the crime here? All right. So again, we're going to see a lot of action this week. We do have some economic numbers, I believe even maybe some inflation numbers this week that will be key to this market. The 10-year yield is hovering above 1.9%. I do think within the next couple weeks you at least break and breach 2%. All right? So interesting on that front. I do want to address Peloton. Peloton, absolutely amazing move here. Monster move to the upside on Peloton Friday in the after hours. This traded north of $34. Just absolutely incredible move there. Again, I did use that period as an opportunity to exit the position. I know some of you guys out there, you may not be able to sell after hours if you're overseas, but if you're in the U.S., you should all have that ability. If not, you should not be with that broker. In addition, if you're overseas and you're not able to do it, you should talk to your broker and see if there is a way for you to do it. Because honestly, it's kind of like, giving you, the ball to run with and then taking out your knees with a sledgehammer, right? I mean, it just, if you're going to not be able to do what every other trader is going to do, well, then what the heck? You're going to get caught in these scenarios. So I was able to close it out for a great gain. I think most of you guys were as well. What I would do is if it opens tomorrow, which it should, higher, I would just look to take profits at that point. Probably opens around 32-ish with that rumor, maybe even a little higher, who knows. But either way, look to bank it. What I'm going to do is if it pulls back, I think generally rumors are not true. And if it pulls back low enough, then I'll just buy it again at that point. All right. So again, nice job for those of you, the guys that was a gift, by the way. It was so crazy. So I was actually coming back from the gym and I happened to get an alert on my phone and it said like rumor of Amazon being interested in buying Peloton. I was like, holy cow. It was like after 5 o'clock, 5 p.m. Eastern time. And I just jumped on it right away, sold it myself, then posted to you guys. Again, I got out. I didn't get out at the highs, obviously. It was so fast and quick, but I still got out at $33.35 in the after hours there. Okay, so that was awesome. It really capped an amazing week, folks. I mean, the movement here in the market has been phenomenal. The volatility has been great. The charts have been reacting perfectly as the psychology dictates it should, as the technicals dictate it should. And again, that is very exciting to see. All right, let's get into some questions on this beautiful, wonderful evening here as we get into price action. First question coming from Anthony. Anthony saying, what do you think of master limited partnerships like New Star Energy NS? Let's take a look here. Is it true that distributions dividends are tax-free in general? Any tips on reducing taxes for capital gains? Yeah, so number one, you can't really get away from paying taxes, right? I always say to people, and people said this when I was younger, is that if you're paying taxes, it means you're making money, right? So you just kind of got to suck it up and pay those taxes. In terms of are the dividends tax-free for those, you honestly need to talk to an accountant. I don't know enough about different strategies and different things to be able to tell you that. My job is to just find the levels to buy and sell and make money for us. But again, all that stuff your accountants will know. In terms of that. In terms of reducing taxes, you can give money to charity. That's a great way to reduce taxes. You make $100,000, you want to give it away. You won't pay any taxes if you give it to charity. So that's one opportunity. Another way to do it would be like what I did end of year, which was selling some specific positions, taking some losses so that it would offset some of my gains. Didn't offset a whole lot of gains, but it reduced it a little bit, and that's fine with me. And then I used the maneuvering of, and you guys remember this from January, we had the VXX. We took a loss on that, then bought the UVXY, which is a different, ETF. And so it doesn't, the 30-day hold that you have to wait to rebuy doesn't apply. Essentially the wash sale rule, and therefore we were able to make great money when the VXX ripped in or the UVXY ripped in January when volatility took off. So, those are just some of the ways to do it. I mean, again, I'm sure there are other methods too, but like I always say, it's just better to go to someone that has an expertise in that versus me. My expertise is chart reading and chart analysis. And again, generally I like to stay in my lane just because I always am fearful I don't give maybe I'm not giving the right advice or something like that. Okay. Ross saying, love your daily mentor videos. They are priceless. I need a TA book to read on a plane and the beach. Can you recommend one for a non-beginner? Wow, that's a great question, Ross. A non-beginner, so you need something a little bit more advanced. Have you taken the methodology revealed in the Elite Keys webinars? The only reason, for reading, that's not going to be possible. But if you have like a tablet, you definitely could watch, the webinars on the plane. That might be a great way to just relax and take in some good information and kind of absorb some stuff in a great environment. So good stuff. Enjoy. Graham saying, with regards to your predicted 20% correction sometime this year, would it be the best to wait until then to buy beaten down Chinese and U.S. stocks or accumulate progressively over time? So I think for the most part, it depends on your time frame, right? So look at what I've done recently, right? We bought various beaten down tech names and we took a lot of profits recently, right? With lots of profits. I'm still in some of them like SE, which has had a great move up. Even Friday was a nice move on SE, trading at about 155 per the close, up about 7%. So I think there are opportunities where you can buy them and then look to sell them into the move ups, and then you can probably buy them cheaper later on. So again, like SE, I still like it. I still think it's got more of a bounce considering the massive decline, probably back to this 180-ish level in that respect. So I think, again, it's if you're telling me you're going to hold them for 6 or 12 months, then I would tell you to wait. But if you're open to swing trading, which is what I do, then I think you can play them at the right technical levels and just do what we've been doing all year, which is, buy them, sell them for 10, 15, 20% gain, buy them again, sell them for another 10, 15, 20% gain, and kind of rinse and repeat in that regard. Okay? Jonathan saying, especially enjoying the daily videos lately. Love how you keep us updated on the trades and provide educational insight. I've heard you say often in interviews lately that you like South American and other internationals besides China, yet we don't hold any at this moment. Can you share some that might be interesting? Yeah, I mean, so I definitely like those other areas. I haven't done enough research on some of the specific stocks. I think STNE is one that's based out of Brazil. This one's definitely getting interesting to me if you look at the corrective move that this has had. I mean, that's really a remarkable drop here. So that's one that I'm keeping my eye on. I believe we traded this a few months ago. And then there's a few others out there. I think even the EWZ is an ETF, but look at the bounce that's already had. So we wouldn't chase it at this point. What you'd look for is a retrace, probably a pullback towards maybe 29 or so, and then you could look to play that ETF to get exposure to Brazil. But yeah, I mean, again, I think what you're going to look for is you want to look for South American companies that have been already beaten down, which a lot of them have, and that have charts that are basically at lows. And I think what you do is you start accumulating small amounts, right? We don't know. I mean, if the stock market, I do believe will at least see a 20% correction from the S&P highs this year, but I don't know specifically if some of these will go lower or how it'll all work out. By the way, Bitcoin, nice little surge here, beautiful little surge. Be interesting to see as Bitcoin just took out 42,000 here to see if that holds, but beautiful Bitcoin move right there. a little bit of a pop coming in on that front. So very cool. If you're in the crypto service, we've just been killing it there as well. All right, Navjeet saying, hope you're enjoying your weekend. I understand that you go into trades based on technical levels, but I noticed that you hardly go into biotech stocks in 2021, except for GILD, ICPT, mRNA. We did not trade any. I was wondering why. Yeah, so I mean, you just mentioned 3 that we did trade. Right now I'm in the IBB, but you have to wait for the technicals to align, Navjeet. So that's really important to understand. So like I was short in 2021 on Moderna. We shorted that as a swing trade as well. So there's longs and shorts available. But again, the chart has to tell me it's ready to go, that there's a buying opportunity or a shorting opportunity. I'm definitely not going to force anything. I think as soon as I start to force, those are the trades that go against us. So we just have to be patient. So, some years it may be a ton of biotechs. Other years it may be very little. It's all going to be dependent on the charts and where the best opportunities are. Okay? Richard saying, what's your narrative for gold going between 25 to 3,000 by this year? And how could this affect the juniors and the senior gold mining companies? So if gold does go up like that, then it makes a lot of sense that the miners should do very, very well, especially the juniors as well as the seniors. The idea here is very simple. I mean, and I've talked about this in almost every interview, right? Is that you have a bull flag forming on the daily chart. On the GLD, you have this beautiful wedge pattern, but the longer-term pattern is a big move up from 2018 to 2020, and then all of this is bullish inside bar consolidation, right? If you look back at the 1975-ish range, you had the exact pattern that gold is doing now happen then. So in kind of the 73, 74 period, you had a move up. In gold, a pretty solid move up. Then for about 2 years, like 75 to 77, you went sideways to lower. And then you had a major breakout. And if you look at the inflation numbers, they're most representative of that period of time as well. So you're having basically the 1970s gold price performance play out. And I think gold in the late 70s went from about, I don't know what it was, like 200 or something like that, all the way to like 800 or 900. It was a remarkable move to the upside in terms of percentages. Now, if that happens, gold is going to go to like, $5,000, $6,000, $7,000, $8,000 an ounce. I'm not saying that that's going to happen, especially not this year, but I do think you get the breakout on gold this year, and you should see it move to the upside. And the best obvious indicator is that even though the Fed is trying to play hardball right now with saying, oh, we're going to clamp down, we're going to remove liquidity, we're going to do this, we're going to do that, we all know that at some point the markets are going to go down so much that unemployment's going to start to rise. Then the Fed is going to have to reverse course and go back to, printing money again. So, the gold trade, whether it's this year or the next year after that, the gold trade is the place to be, considering the U.S. debt numbers, considering the balance sheet of the Fed, considering the fact that the Fed has to deal with unemployment as their dual mandate. They have to, right? It's their dual mandate. So when unemployment starts to rise, the only way for them to save the economy is by making money essentially free, which pushes it into the system, which then gets the economy going. And again, the more money printed, the more it makes sense that gold should go up. So anyways, that's just, there's other factors too. There's a measured move calculation that I've done before in some interviews, but just to kind of summarize, those are some of the main ones. Okay, let's take a look. David wondering about auto. Let's take a look at that one. Auto Web. Kind of a weird chart here. Looks to me like it's just kind of chopping around. Let me get my trend tool out here to draw some trend lines. There's a very obvious trend line connecting these lows. You can see right there. So as long as price holds there, it's okay. In terms of highs, looks like kind of this is your upper range here. To me, there's nothing on this chart that's very definitive in terms of go long or go short. So it would kind of be a no touch for me. It just looks like a lot of choppy action, not the greatest of bullish patterns, almost even looks a little bit bearish to me in terms of this trend line just getting hammered over and over again. If this breaks, you go all the way down to probably $1 level on that. Rossi mentioning, thank you very much for sharing your insightful knowledge on technical analysis and investment discipline with us. I thoroughly enjoyed every video you posted. Thank you so much, guys. I really appreciate the kind words, those wonderful words from a lot of you guys as well, by the way. And I really pride myself on doing those videos and trying to kind of give you guys that insight that you're not going to get from CNBC or Fox Business or any of these other places, even Bloomberg. You're not getting this type of stuff. Okay? Rossi wondering about a question on Wish, which is context logic. The price has been in a declining mode for the last 12 months. I've been adding some shares along the way, but I'm having a hard time figuring out if it has bottomed out. Sure, let's take a look at Wish. Absolutely. See what we got here on Wish. Yeah, wow, look at that chart. Remarkable drop. You know, this is the kind of chart that even I would do. I haven't done research in this, so I'd be interested in just kind of looking a little bit more into it. I mean, it certainly looks like it's been beaten down. What I like is that you can see right here, if I zoom in, it did have a push up, and now it's kind of pulling back. So I'd want to know, why did that push up? Is there a large amount of shorts in this trade? I mean, what's going on here? It certainly is at the lower end. You got a bottoming tail right over here, so you have a little defined bottom at around $2.10. So, there are some things here that are intriguing to me, but anytime you're potentially going to invest in a $2 stock, you got to do in addition to doing technical analysis, you got to do fundamental analysis. And you won't hear me say that very often, right? I'm not a big fundamental guy, but when you're investing in a stock that's basically a $2 or a dollar or even a penny stock, you have to see it. You don't want to invest in something and then have them declare bankruptcy the next day or the next month when you're in that trade. So you want to just do that due diligence. How much money do they have on the balance sheet? Are they producing revenues? If they're currently losing money, what is their burn rate? All these type of things you want to kind of figure out if you are investing in it. And I may look at the balance sheet and say, oh, this looks like it could go to $5 maybe. But again, I would have to do that research. All right. So the chart is intriguing. I would just have to do more research. You might have done that research already. I don't know. But again, very interesting. John saying, how much short max percentage of portfolios are you willing to go in the cycle? Yeah, I mean, in general, I'm willing to go as much as 70%. Whether it's long or short, you'll usually see that I have, up to 70% long or short in any particular bull or bear cycle at the max. I usually don't go beyond that in terms of positioning. You'll always find me with some longs, like for instance, in this bear mode over the last, couple months as the markets have been topping out, I've been long gold. Now, you could consider that kind of being short the markets in a weird way because it usually does better in tougher market conditions. But, again, that's technically a long trade. But, for me, it's all about just reading the charts and letting the charts guide me, right? And I always believe there's some stocks to be long. Like you guys know me, I've been accumulating China stocks for a long, long time. We've made some money on some. We still have some that are down. But ultimately, I do believe that the Chinese names are still going to rock and roll and really do very, very well over the next 6-12 months, even in a tougher environment in the U.S. So, there's always places to be. Even if I'm short the NASDAQ or the S&P, I think there are some areas to be long as well. But in general, in big bearish, basically when things are topping out, you'll see me as being the most short. And then as the markets unwind, I slowly take profits on the way down on those shorts. VJ saying, hope you had a good weekend. Thank you, buddy. I did. Your views on adding to Chinese names like TME, IQ, Tiger, and HUYA, Baba, Baidu. Yeah, so Baba and Baidu are basically flatter in the money, right? So I don't think we'd add to those at this point. TME, IQ, those are down significantly, so I am kind of eyeing. I'm just trying to really pinpoint the best reversal signal. I want to see some sort of, bigger signal out of China. What I'm kind of doing also is I'm waiting till after the Olympics. One of the things that has me, it's not a big concern, but it's kind of keeping me from adding to those, is that I wonder if they've stopped with the regulatory stuff because of the Olympics, right? They don't want to freak out the markets while the Olympics are going on or leading into the Olympics. Once the Olympics are over, I'm curious, do they start with some more regulations or are they really done? If they're really done, then all these stocks have a ton of upside. If not, then that could be a bigger issue, right? And I think one of the things we're waiting to hear too is about Didi, right? So we know Didi is going to be delisted from the NYSE, but we don't know details. Is it going to trade on the pink sheets? Is it going to where is it going to be trading? Or is it just going to be trading in Hong Kong? So I think personally that China's gone quiet on that issue until after the Olympics, right? So after the Olympics, we're going to get a little bit more clarity, and that would kind of be where I would look at it, okay? Stephen saying, what's your view on Tesla? Can it go higher? So I continue to be a long-term bear on Tesla. Again, shorter term, it actually has a little bit of bullish consolidation here, but it does concern me in terms of the longer chart. And if you're a bull anyways, you have to notice that you're starting to make short-term lower lows, right? So here was a low, lower low, high, lower high. So you definitely have something going on here where it's telling you that the trend is now reversing from making higher highs all this way to now making lower highs and lower lows. So ultimately, I still think it's going all the way down. My target, I think you have a target at around 500, and then I even think it gets down to as low as around 405, which is this gap fill down here and all this consolidation. But I do think, again, doesn't mean it can't go up, $100. Tesla can go up $100 in a day, but ultimately the trend to me is now down, and I expect it to continue in that direction generally with big bounces along the way. And by the way, thank goodness we get these bounces. I mean, think about, I was mentioning this before, but like SE, it touched $120, and 3 days later it was at $160. I mean, that is just an incredible, incredible environment for swing trading, if you can read the charts and if you can position. So, all right. Robert saying, do you think the price of copper is going to higher over the next several months? So copper is very, very tricky. JJC is the ETF that tracks copper. The copper chart is actually bullish, right? So this is classic bull flag consolidation, very similar to that on gold, even maybe a little bit nicer than gold, you could argue, with this kind of nice sideways in the very upper range. So the chart is bullish. In general, we want to just follow the chart. So I would say yes, odds favor that. Probabilities favor higher copper prices, which implies, by the way, more inflation. But the one caveat with copper is that it's a growth factor, right? So if we see the economy in the U.S. or around the globe, global economy starting to suffer a little bit, then does the demand for copper go down? But again, technically, you're not supposed to pay attention to that. You're supposed to just follow the charts. The charts are saying bullish consolidation as long as you hold these lows right here, right? So on the JJC, $20, $20.20, this area down here, that's what you're watching. As long as that holds, then yeah, you would think copper is headed higher. Colin saying, you are the Beastmaster. Thanks, buddy. Appreciate that. Truly appreciate all you do. Quick question. Do you include your total margin account when determining how much percentage of your investing in a position to do? No. So what I do is basically when I'm giving you a percentage like 2% or 3% or 5% or 1%, that's based off the cash value, but I'm willing to go into margin if need be, meaning that, if I've invested up to 100% of my cash, then I'll just go and do another 2%, which would be 2% of the count value, but then I would be using margin at that point. But I'm not like, let's say, just to use, arbitrary, value, let's say you have 100,000 in a cash account, you get 2-to-1 margin, so you have 200,000. When I say 2%, I'm not talking about $4,000. That would be off the actual account value percentage, okay? AJ saying, with CPI data coming this week, do you see Palantir going into single digits? I don't necessarily think this week, actually, but I do think Palantir will go into single digits at some point in the future, yes. Again, the market is kind of getting, it's one of those things where you have to wonder if the market's getting a little too bearish on CPI data, and we'll have to see what it is. But I do wonder, again, if the buildup could actually be a relief as a possibility. Ultimately, are we going to go lower? Yes. I think the markets, again, there's no way, in my opinion, that, we've now broken the upward sloping trend. I've shown you guys that on the spiders. I've shown you guys that on the Qs. This trend has been broken. That is a big deal. That is an epically big deal. I still think we could go back and retest that upsloping trend line, but ultimately, I do think we are headed lower. Okay? Let's see what else we have here. Steven asking about C Limited. We talked about that already. Jennifer saying, thanks for a great week, Gareth. You have several short positions you entered in 2020. Do you suggest new members get into those shorts? I think you can if you want to. I'm playing those for the kind of longer move, and we've actually seen some of those I closed out already for profits this year as we're just seeing this market starting to correct. But again, if I'm still short those names, then I believe that they are still going lower. Whether or not you want to pick up those or just wait for new ones, that's totally up to you. But I wouldn't be in it if I didn't think if they weren't gonna go in the direction that I believe. Now, I can't guarantee I'm gonna turn all of them into profits. Some may be small losses, but ultimately, like a Tesla, it's going lower. There's no way the valuation on Tesla even closely makes sense. In fact, I read an article which was just confirming something that I've said for now the last 6 months, is that the competition Tesla is going to be facing, their market share is going to get absolutely crushed by the amount of EVs coming out over the next couple of years. Now, it doesn't mean they're still not going to be a great company. I still think Tesla's a great company. It's just the valuation is absolutely ludicrous, even at current levels on Tesla. Okay? Ronak saying, I hope you had a great weekend. As always, I can only thank you for everything. Where did you come from? You are just awesome. Thank you, buddy. Appreciate that. Looking forward to close some of these trades. I've been open with you and start banking some more profits. Awesome, buddy. Thank you. And yeah, I fully anticipate that we'll continue to put up winners on the board. Generally, doesn't mean we're going to have all winners. So one of the things I always say is always make sure you guys follow the allocations. One of my greatest fears, and I've seen this, is where someone joins the service and they get like 5 straight winners or 10 straight winners, and then they're like, oh man, Gareth's just so good, he doesn't lose. And then on the 11th trade, they put all their money in it, and then that's the one loser. And of course, in general, unfortunately, people that tend to do that aren't the type of people that want to take blame themselves, and then they're like, oh, Gareth sucks, like, oh, well, dude, what do you expect? I'm not going to be perfect. You have to follow the allocations. There's always a reason why I allocate my portfolio like this. I always say this too, folks, is my portfolio, I treat it like a hedge fund. I'm opening a hedge fund. Yes, that's in the process, but I trade my own account just like it was a hedge fund, which means I'm not over allocating in any particular name. They're generally going to be small positions so that I can grow over time, making great money, 20, 30, 40, 50% gains a year, but I'm not going to swing for the fences because I might strike out and put all of it in one position. So again, investing is a marathon, not a sprint. That's an important thought process to understand. I always recommend this thing. Take like a $100,000 account and compound it by even 30% a year and see how fast that account grows to $1 million, to $5 million, to $10 million when you compound it, just making consistent 30% returns. It's really incredible how fast that money will multiply. All right. Donovan saying, thank you for all your help. If inflation numbers surprise to the downside this month, could you see the markets float back up or back to the upper trend line channel? So the upper uptrend, so number one, this one, yes. This one up here, I don't think so. The reason I don't think so is that even if inflation starts to moderate, the Fed has shown that they want to exit QE, number one, which is the tapering, and they want to normalize rates. So, again, I think weirdly enough, if the markets go up, the Fed would actually feel better about, raising rates, right? Think about this. If the markets dropped 30% in the next week, how many of us think that the Fed would still raise rates? I don't think so. I think they would back off immediately. But if the markets continue to move higher, the Fed would say, okay, well, if we raise rates and the markets drop 10% from the all-time highs, no big deal, right? So it's kind of weird like that, how the Fed, I don't think, the Fed wants to get out of these scenarios, these kind of, extramarital type things that they've created. I just don't think that the market moving up would actually, even if the inflation numbers were better than expected, meaning lower, I still think the Fed wants to raise rates and normalize things a little bit, which is the right move. I mean, they need to. The bottom line is, my only issue with the Fed is that when the markets do collapse because they're raising rates, which to me is inevitable, then they're going to actually back off. What they should do is actually just normalize and let the markets crash, but they just can't do that because their dual mandate is going to dictate, you guys know the drill by now. I don't need to repeat it a million times. All right. Next question here is from Matthias saying, still a good time to get in Zoom and TDOC? Yeah, I mean, I think so. I think TDOC, you could still enter. I actually like the short-term pattern here. If you zoom in, you got a little bit of a bullish consolidation here. I love the fact, too, and not to toot our horn here or anything like that, but if you look at what Cathie Woods has accumulated in this name and her average price, when we're buying it down here, we're getting it so much cheaper than her. And listen, I like her long-term vision for these companies. What I had a problem with and what I still have a problem with is she didn't seem to care about the price, right? And so you can like a company and think the price is insane, and then you could like a company and at some price, it's a great buy. And I think as an investor, that's the most important thing. I mean, you could be in the best company in the world, and if you buy it at ridiculous bubble valuations, you could be down for 10 years before it recovers. That's no good. So, yes, I like Zoom. I like TDOC at these levels for at least a bounce. Do I think they're going to go lower eventually? Yes, but I think they're beaten down enough where you're going to get probably more upside in both names. Like even TDOC, I think it could go back to $100, which is a huge move from here. Kathy Woods was buying it at like 300 or whatever it was, but it's crazy. I mean, look if I zoom this chart out. I mean, is this incredible? I mean, $300 down to the lows a couple like last week of 65, 67 bucks. Just incredible drops. All right. Anyways, Kurt's saying, are you long-term 12 to 24 months bearish on oil or bullish on oil? So I'm definitely short-term and longer-term bearish at this point. You guys saw what I think I showed you guys in the daily analysis video here. I got a lot of other lines here. I showed it to you on the WTI chart. I don't have the WTI on this, so we have to use the USO. But what I want to show you guys here is, I mean, this line alone, just in the short term, is epically big, right? I mean, look at that hit of that trend line. So I do think oil, any pierce of this line is just, for me, I'll look for more opportunities to short other oil stocks, all that kind of stuff. But yeah, I am a big fan of the short side on oil here. For those of you guys that have paid attention recently to the daily analysis videos or to my interviews, I've also talked about how when markets top, like in 2007, oil actually saw a rotation of capital into that commodity for the next 6+ months. It wasn't until mid-2008 or late 2008 that it topped out, and then it crashed. My guess is the same thing is repeating here, where the stock market has topped. We've seen tech come in. Money has rotated. So institutions don't want to remove money from the markets, right? They always want to be invested. So what they're doing right now is saying, okay, well, we can't be in tech. That's getting crushed. So let's go find some place to put our money. Okay, let's put it in oil and oil stocks, right? So oil gets money flow, which causes it to go up here. You can see how extended the chart is at this point. Eventually, that will start to fall, and then those institutions will finally get so scared of the market as it collapses that they'll exit everything. And that's really where you get that final washout like we saw in March 2009. So again, it's not to say that oil can't go up a little bit more, but ultimately to me it's repeating the 2008 move. I don't think it'll go to 140 like it did then, but still, I mean, it still looks like it's repeating it. Okay? Next question from Hajyoti, I hope I'm saying that correctly, saying I have a small account. If I follow your position size of 1.5% to 5% per trade realization, becomes negligible. Can I increase to 10 or 15%? So that's really up to you. Again, I can't endorse going heavier than I'm going. You have to decide that on your own, and then you'll just have to, you'll either make lots of money or potentially you could lose a lot, right? So again, really up to you. But yeah, you just think about it, weigh the risks, the rewards. Generally, I like to say you want to grow your account slowly. Anyone who tries to turn a 10,000 account into 100,000 in a week usually ends up going broke. So just keep that in mind as well. Yes, I will generally be putting out winners. I mean, that's been my track record since 2007. But for those of you that have been with me since 2007, there are periods where the market doesn't behave technically either, and we can be down on certain positions for long periods of time until the technicals finally bring things in and reality comes back to the market. Okay? Felix saying, thanks for your daily guidance. Is MSOS a good way to play the cannabis chatter over the past week? I'm in CGC already at a higher level. Sure, so let's take a look. And yeah, I have noticed a little bit of that cannabis chatter starting up. Yeah, this one's good. Advisor to pure U.S. cannabis. It looks like a great way to play it. Yeah, I love that chart. Beaten down. Had a huge move up. Looks oversold. Trying to put in a bottom here. Looks like a little bit of consolidation in the last few days. Looks really good to me. I like that one. Absolutely. Curtis saying, can you look at NET for a short? Sure, let's take a look at NET. All right, so NET actually starting to pull in bullish consolidation here. Now, it's not a mature pattern yet, but I certainly wouldn't want to short this because of that potential for the mature bullish pattern. You can see sideways days. That could mean upside. I still have NET priced in to go higher here, and I'm going to erase some of these trend lines so you guys don't get confused. But see this pivot low right here? I think that's where you're headed. So you're headed back to kind of the 110, 111 level. At that point, would I short it? For me, no, because it doesn't fit my criteria. My criteria to short are very extended moves or bear flags. If you look at the move this has had from 220 down to 80, a bounce back to 110, yeah, it's a good bounce, but I wouldn't look at that and be like, holy cow, that stock is so overbought, right? You don't get that kind of vibe from just a retrace like that. So it just doesn't quite fit that criteria for me. Doesn't mean it won't pull back off that level. It will be a lot of resistance. but it just doesn't have the risk reward I feel comfortable with. Okay. Steve's saying, will you update us on your hedge fund, and will you give subscribers access? So yes, subscribers. Listen. Anyone can have access. Obviously, there is a minimum. All right, so you have to be a accredited investor with $500,000 to invest in it. So I understand a lot of people won't have that, but again, the idea is to run a hedge fund, you have to have it. There has to be a certain accredited investor level to have access for regulatory reasons and so forth. So yeah, I'm excited. The launch date is likely, again, nothing's in stone yet because we're still doing, there's a lot of paperwork to do, a lot of things to set up, but it looks like probably April 1st. I'm hopeful that's when I will launch. And of course, I'll mention it to you guys, when it's live. Or you can ask me about it at that point. No problem at all. But I'm excited for it. It's definitely going to be, and I'm still going to do these videos daily. I'm still going to run the chat room, so nothing really changes in that regard. I'll just be managing a hedge fund. And again, the beauty of it too is like I live and breathe the markets, guys. I'm in the chat all day, in the morning at least. I'm always following the markets, and it's just, it's just a simple extension of what I've been doing for the last 20 years to do the hedge fund, and I should be able to generate some pretty remarkable gains. It'll probably be a little less risky than verified investing. I plan to anchor the account in the fund in certain positions like gold and some various things where I see a longer term uptrend starting because of weakness in the dollar and inflation. But then I'm actually going to do some swing trading. A lot of it will be swing trading and then some day trading as well when I see a great opportunity. So it should be really cool, like a multi-layer fund. Very cool stuff. All right, anyways, John's saying, you have predicted a good year for gold. Do you hold physical metal or just miners and GLD? I do hold physical metal, but by the way, it's a great question. The physical metal that I hold is not because I think gold's going to go to 3,000 and I want to sell gold, right? So the only reason because I could just hold the GLD for that. The only reason to hold physical gold is because if something catastrophic happens, like let's say there's a terrorist attack that takes down the grid or something like that, right? Where stuff's just really messed up and you can't go to an ATM, you can't get money out of a bank, you can't get your Bitcoin off of, can't buy something with your Bitcoin. Well, what's gonna feed your family for a week or a month while the stuff's down? And the answer is metals, right? There's going to be a value there in the metals. So, that's really the only reason to hold physical metal. It's kind of cool to hold it in your hands too, obviously. But in reality, it's that catastrophic situation that makes me feel good to have some on hand in case that situation were to arise. Okay? Other than that, certainly I have way more money in my GLD long position than I do in physical, right? Physical, again, I look at it as, a shorter term need. I don't need, $1 million in physical gold, right? 50 or 100,000 is more than enough in my opinion, should be, especially if stuff went crazy and gold really rallied sharply higher, then that could be worth $1 million just there, right? Anyways, hope that makes sense to you. But I do think, I always recommend every individual have a little gold and silver on them. It could be in jewelry form too, by the way. It doesn't have to be in like a bar form or a coin form. It's the idea of having that security that if something did go crazy wrong, that you can sleep at night knowing that if that happens, I can still go and buy food for my family, or if I gotta hire security or whatever, just never know the crazy scenarios. Hopefully never happens, but it's kind of an insurance policy against that. King saying, thank you for the amazing trades this past week. Twitter reports earnings this week. Given how wild social media stocks that have reported earnings have been this week, do you see us taking profits before earnings? So that's a great question. Let's look at Twitter. So Twitter had a nice day on Friday on the back of Snapchat. I would say this. If Twitter's in this range, I'll probably hold it into earnings. You have a bottoming tail here, and it's still in the lower end of the range. If Twitter were to rally up, let's say, to 40-ish or above, especially up to this pivot right here, then absolutely I would assume it's factoring in good earnings, which raises the bar for earnings even higher and makes the risk more to hold it into earnings. So a lot of me holding it into earnings will be based on where it's currently trading going into earnings. And that's almost for all the stocks, folks, is I'm much more likely to hold something that's been beaten down into earnings because the expectations are so low. Everyone's already saying, oh, their earnings are going to suck, and therefore they're selling it, and that's why the stock is at 52-week lows, for instance. When it's trading at 52-week highs, and we've seen this with a lot of stocks recently, Netflix, I mean, you saw what happened in Netflix. We saw what's happened to some of these other ones as well. Facebook, another example. Expectations are so high that it really causes, the company to either have to blow away earnings to keep going up or it's going to fall. All right, so again, that'll be based on price action. Ronak saying, also, please visit us here in Portugal, Porto soon. Oh, I would love that. I would love to get over to Portugal. At some point, I'll do a round the world trip. Brett saying, thanks for everything. What's your rough target on NET? Yeah, so I think we talked about that earlier, just that 110 level. That 110 level to me looks pretty interesting as a resistance level on NET. It's not that far away, but I think, again, that's where you start hitting more resistance on that one. Okay? William saying, how do you feel about NEO at this point? For a long, it filled the gap at 21. Sure. By the way, I was looking back at some of my history, and we were buying NEO at like $2.50 a couple years ago. Crazy stuff when you think about where this stock ran to, going up to like $65 or whatever it went to. Having said that, short-term bullish consolidation. This is actually a really nice bullish pattern. So considering you have a gap fill up here, I actually like it for a move up to get to the gap fill, which is up to about $27. So, yeah, looks good. Looks good for a little bit of a move up there. You got a nice little, looks like a bottoming tail right there, surge up, and then this is all bullish consolidation. So the chart is actually, this is actually a really nice chart. Really, really nice chart. Again, probably at gap fill, you look to take profits. You have all these pivot lows also just above gap fill, which makes sense that that'll be kind of a point where you'd probably want to take profits. Bitcoin still hovering around 42,400, so nice to see. Futures are up about 5 points on the S&P. Again, negligible move there, but again, definitely not seeing it dump at least in a huge way, at least not at this point. Rama saying, hope you had a good weekend. I have Amazon RSU vested at 3,650 in 2021. Do you think that it will go back to those levels this year? Wondering if I should sell now for a loss despite the bounce post-earnings to invest in other swings. So my big fear is that, yes, Amazon rallied nicely on earnings, but I have a hard time believing in a bear market that this is going to go back in the near term. So one of the things to note, see these pivot lows here? Let me just punch this in here. So you have these lows right here, okay? And look at where Amazon stopped on Friday, right there, right? So again, you can see already the resistance starting to kind of cause problems. Doesn't mean it can't go up a little bit higher, but at least if it was me, I would take a small loss on a move up. Maybe tomorrow it even moves up a little bit more. Maybe you retest the highs or something. But yeah, I mean, I probably would be in the camp that I'd start to look to take profits between 3,200 and maybe 3,300 or 3,400, somewhere in this vicinity here. And then again, the beauty of it is when you free up cash, it gives you that opportunity to put it other places. So there's definitely been times in my career where I've still been down on a position, but I've said to myself, you know what? I see these stocks over here that are going to bounce 30%. I mean, think about SE, right? 120 to 160. So that type of move, unless you think you're going to get that type of move out of the stock you're in, it does make sense. It does make sense to take that off the table and then put that money to use in other areas. And then you can always go back to it later on, right? I mean, at some point Amazon pulls back, you can always go back to it. William saying, is Mara something you would buy when Bitcoin drops below 20,000? Yes, absolutely. All right, so I called the breakout on that, and obviously Mara's rocking and rolling, and if Bitcoin holds up here at 42,500, we should easily be able to take some good profits on Mara tomorrow as well. But yes, eventually I think Bitcoin's going lower, and therefore I expect Mara, MicroStrategies, Riot Blockchain, all those names will go a lot lower at some point, and I will be looking to buy them when I think Bitcoin bottoms out. Okay? Kevin saying, with massive sell-offs like PayPal and Facebook, how long do these types of equities usually take to bounce back to a 25 to 50% gain? I mean, that's tough. I mean, it's honestly, if you're asking me when, and by the way, look at Bitcoin go, 42,700, holy cow. But, when Facebook could be up 50% from now, I mean, considering I think we're entering a bear market, it could be years. Now, is Facebook oversold? Did the funds probably reallocate properly and sell what they wanted to? So this could bounce tomorrow? Yes, I think a short-term bounce is likely. You got a doji on Friday, so I think this probably could trade back to maybe 260 or so. But, 50% upside puts this back near all-time highs. That I think could be a lot more time. I think that could take a lot more time. Okay. Randall saying, appreciate the learning. You are an awesome teacher. Thank you. Thank you so much. If prices go up in a staircase fashion and come down like an elevator, why accumulate longs on the way down? Well, because the snapback when things get beaten down is so tremendous that you definitely want to do that. So again, I've used the example of SE, but you could look at NET, you could look at Mara. I mean, Mara we've traded now, we've been in it multiple times, and with Bitcoin where it is, I think we're going to get another probably 10% out of it tomorrow, plus the 10% we were already up, I think, on it. So, in that situation, you have to play. So stocks, so this is important. This is an important distinction. When stocks go up for months and months and months, it looks much more like a stair step, right? But when stocks drop 50% in a month or 60% in a month, they'll bounce back 30% in a couple days. Buyers are always lurking. We just have to be in the trade first and then let the rest kind of take care of itself. So that 30% jump or 20% jump that you can get in a day or two, you can't beat that. I mean, that is an amazingly profitable play to be in. Most people are too scared to do it. But again, I've always been someone, especially as I've learned the charts more and more, where I just let the charts guide me. And I buy little positions, right? I mean, we buy a little here. Okay, I dropped more, buy a little here. Eventually, you're going to get that snapback, which is like a rubber band effect. And then it's very, very profitable usually. Michael wondering about FTCH. Let's take a look at FTCH here. Yeah, that one's been beaten down. Looks like it came right back to the lows already. In terms of technical support, there's a little support down here, which is right around 1625. So 1625 might be interesting. I don't see a level currently, aside from the little double bottom it hit about a week ago. So I don't think I would mess with it at this point. But 16 and a quarter, 1630, yeah, somewhere in that vicinity, it looks pretty good. All right. Ryan saying, would you consider drip as an option to short oil? I'm overseas and don't have access to SEO, but can buy drip. Yeah, that's fine. Yep. Anything that gives you the exposure, right? I mean, so, you just want to obviously look at what the ETF tracks, or what it what any of these things track. And then, yeah, I think, again, I understand that around the world, people have access to different equities, different ETFs. I would even say that there in certain countries, they probably have totally different ETFs that aren't offered here in the U.S., but they track the same thing, in which case that's fine too. You just want to make sure the underlying assets are the same. Okay? Oh, that's so nice, Sid. Thank you so much for the kind words. Sid saying, thanks so much. Thank God that I found you and your company and subscribed to the swing trading for stocks and options, the biggest decision I made so far when it comes to my investments. That's wonderful. Thank you. Sid saying, looking forward to subscribing to day trading as well in the near future. May I know what your thoughts are on XYL? Sure, absolutely. Let's take a look at XYL. Wow, that's a nice rollover on that thing, Xylem. You know what? XYL looks really good down here. I mean, there's a gap fill right here that it kind of kissed. But yeah, I mean, you kind of kissed some good support. You can see this pivot right in here. That is a good support area. And then if you go back just a little bit further, look at all these pivot points. So yeah, I mean, considering the bounce, I wouldn't chase it up that bounce, so you can see that long tail. So I'm not going to pay up there. But I would actually, if this came down again and touched this line, this lower one, around 85 or 84.70, I actually like that. That's a huge, huge support level. Absolutely epically big support level there. Okay? All right. John saying, cheers to your success. If I day trade with 100K on TD Ameritrade, does that mean I have 200 or 400,000 to trade with, and you get 0.33% each trade at least? Yeah, so, you should get, if you have day trading buying power, you should have 400 off of that. Obviously, I would ask that each person confirms it with their broker, because I don't, maybe brokers have different rules. The one thing with TD I do know about is if you have 100,000, you want to subscribe to the hard to borrow list, which basically TD really sucks if you're trying to short and you're not on the hard to borrow list. If you're on the hard to borrow list and you get added to that, and I think you need 100,000 with TD to get there, then you can short almost anything. As a day trader, you want to have that ability. Though there's nothing worse than seeing a great opportunity and you go to short it, and it's like, oh, you're rejected. You can't borrow any shares. So that would be the one thing that I would suggest. In terms of making 0.33%, no, not every trade will make that. Like if we're in the spiders trade, sometimes we scalp, 30 cents or 50 cents on the spiders, and I certainly don't think that's 0.33%. I think on the spiders you'd need at least $1 and change. So just be aware of that. Day trading is about making quick moves in and out with decent sized shares. Again, most of my trades I'm making $500 to $1,000 per trade. Again, some of them are more, some of them are a few $1,000s, but there's no guarantee that we can make 0.33% on each trade, especially on things like the S&P or the Nasdaq 100, since that's a pretty big move. I mean, 1/3% in the indices is a pretty decent move. Maybe not in this market, but in most markets. All right. Ron saying there are multiple resistance points on Palantir at around 27, but there is a gap fill around 2360. What do you see as a potential upside for Palantir, PLTR? Yeah, so we kind of looked at this one earlier. Palantir, again, I still think it's going sub 10 at some point, so be aware of that. Doesn't mean it's not going to bounce near term. I see my first big resistance is this pivot low. I have a trend line there already. So if this got to 1720 or so, I think that would be the max upside I would expect before it heads back down. I don't even know if it'll get there, but 1725 or so would be your max upside there. Okay. Let's see here. Ron mentioning, so we just talked about Palantir. Yeah, Big John saying, feel free to pause Bitcoin if we need, pause the broadcast if we need to cash in on some of the crypto trades. Yeah, I'm certainly keeping an eye on it. Absolutely. So far, so good. We took some profits this weekend already on some of them. But yeah, certainly getting deeper and deeper in the money on some of these, which is very cool. Fakhar saying how to send questions to Gareth. Yeah, you did it right there, buddy. But now, honestly, I shut down the question box. There's a certain point where, I get so many questions that there's no chance that I'll even get to answer them, or I'll be here all night. In fact, dang, this has already been running for over 50 minutes. So I'll just take a couple more. I'm not going to get to everyone's question tonight, guys. Again, these are very, very popular, literally, close to 1,000 in here tonight, and I appreciate that. But yeah, just almost impossible, even when I shut down the question box early on, to get to everyone's question. Okay? I'll be saying, when small companies get bought out by bigger companies, why is it bullish for the stock price? You mean bullish for, I assume you mean for the company that's getting bought out? Well, basically, it's bullish just because no company is going to sell themselves for the current price or lower, right? So when a company buys out another company, they're always going to have to pay a premium, or the management of the smaller company is not going to agree to be bought out, right? So just keep that in mind. In regards to the buyer, sometimes I've seen stocks go up when they buy out other companies. Sometimes they go down. So usually they'll go down because a lot of times companies overpay for stocks, or at least that's how investors look at it, and it's dilutive to shareholders. But there have been instances where I've seen the buyer company actually go up as well if it's a really exciting new venture. Let's say, like if a kind of an old school boring stock buys out I don't know, I was going to say metaverse, but then after Facebook, that's no good. But like a blockchain, right? I mean, maybe that, something like that. If one of these companies buys out a Bitcoin type play, that could give investors a reason to buy and say, oh my God, they're getting into blockchain technology and this kind of thing. Now it's not so boring anymore. We're going to give it a bigger PE ratio versus where it's currently trading. All right. Jared wondering about XLE. And let's take a look at this here, guys. XLE extremely extended. Looks to me like it put in a topping tail on Friday. That is a stone cold short right there. Love that topping tail. Extended chart. Should come in really, really nicely. Yeah, Elon, wonderful. Yeah, hopefully we get some good trades this week. All right, guys, I'm going to pack it in as it's getting quite late in the evening for me. I got to go rejuvenate and kind of start scanning some charts. Thank you guys for coming out as always. I appreciate it. Have a wonderful night, and I will see you all tomorrow. A lot of you guys I'll see in the live day trading room. Have a good one. Take care.